Let's ask Adam Parker. He's the CEO and founder of Trivariate Research here with me on set. I mean, is this good to see you, by the way?
Good to see
and
you.
I hope you had a nice Thanksgiving. Is this China today, or a bit of a reality check also that we just got a lot of stuff to deal with before we can think stocks can put anything real together?
I think it's a little bit of the latter, right? I mean, you had a pretty big risk on trade. Market was up 12% quarter to date. You know, you had financial conditions loosening some, and yet somehow at the same time the curve got even more inverted. It's hard for those of us who've been doing this for a while to think an increasingly inverted curve also means everything's awesome. So you get a little bit of a scare in China or a slowdown. I can see people wanting to sell some of the big rally.
Yeah.
I think it's logical.
Most of America was watching football yesterday afternoon. You were sending out research.
Inverted yield curve.
Of which you said, the risk on trade's gone too far. I mean, you obviously pointed out the biggest inversion of the yield curve in some 40 years.
Right.
But the bottom line is you just think the rally went too far.
Yeah, I mean, look, I don't know if the next 10% moves up or down. I could say there's some positives. The public market looks cheaper than the private market. The small cap universe is at 10 times. It's not like things are, crazy, excessively valued in equities all over the place, but there's some real reasons to be cautious. The market's rallied a lot this quarter, and there's some, concerns that things are going to slow. So I think it's kind of balanced risk reward, and I think there was an excuse with maybe some China slowdown fears for people to collect little profits that they made in the quarter so far.
And see, look, I don't want to downplay what's happening in China at all as having an impact potentially on what we're seeing in the stock market. But really, in the big picture sense, how much does it matter?
I think it's bullish for energy. You know that I love energy, and I don't know, 26 times in a row.
Why was oil down?
Well, what I think ultimately is if China can reopen, like you're looking at oil where it is now without like an incremental demand story from China. So if this is, there's some rumors out or some stories out that maybe by, the early spring you could kind of get a little bit more relaxed on COVID. You could see sort of a pickup in oil demand. As you know, that market's so thin, you get another 1 million barrels of demand and we could have incrementally higher oil. So I'm just thinking out medium to long term. If we had this high of an oil environment without a big participation in China, maybe that's kind of an upside scenario in a 6-12 month view.
But you're assuming that the protests lead to some sort of meaningful change to a policy.
First time I've seen today a story that, maybe they're sort of leaning toward relaxing a little by early spring. I mean, there's, so I hadn't seen anything other than hardline stories on that topic. So, look, I'm not making a China reopening call. I'm just saying when I look at what's in the prices, I think maybe incremental demand there could be sort of bullish for the demand-supply imbalance that's been around and will be around for a decade in energy.
Well, I mean, there are important areas of the market that are obviously impacted, right? We saw Apple today seems to be the biggest one, at least, the headline makers. We watch that, but it's metals, it's mining. When you worry about global demand, it's your old stomping grounds, the semiconductors.
But a lot of that stuff was, again, 20% plus up quarter to date. So it's a little bit of what do I sell when I get a little nervous? The stuff that went up the most that maybe we talked about it right
that's funny because Jonathan Krinsky, BTIG, right, have him on the halftime show a lot. He put out a note suggesting that the chips have gone way too far and they are so set up for a reversion. You agree with that?
Everybody I know, and this makes me worried, has some sort of triple breaking putt call. I mentioned that in the note. It's going to go up near term, and then it's going to go down medium term, and then it's going to go up. And I'm not even good enough to make the first direction of the putt, forget all three. Like, you can't see all three and get them all correctly. There's such an arrogance in getting that right. So I don't even try. I don't really know. I think if you want to invest now, it's got to be something you believe will be there in the long term. I think some of the quality semis will, but I can't make the up, down, up call. I just think right now we've gone too far. It makes sense to take a little risk off just because you can't have an increasingly inverted curve and looser financial conditions at the same time for a sustainable period. That's just illogical.